Okay, Mayuresh Joshi, fund manager at Angel Broking, as well joins in to chat about what is going to be moving in the markets. Mayuresh, hi, morning. What is your sense on names like a Biocon? Because it seems like, irrespective of the volatility, some of the companies like a Biocon continue to deliver, and that reflects in the stock as well.
Morning, Aisha. If you're talking specifically about Biocon, again, I think the kind of moment that you've probably seen in the stock price is more or less to do with expectations of what kind of molecules under development that they've got shall start developing revenues over the next few quarters. Yes, I think the business fundamentals are quite intact, but I'm more concerned with the kind of capex that the company has put in specifically towards its Malaysian insulin plant, which again is going to take some amount of sheen off because the utilization levels are not that high. And again, I think all these molecule development, even if they go in stage 3, do take time, and the monetization thereof is a long process. Secondly, I think even if you look at their core capex of around 250 odd crores every year planned, along with the R&D spend that Biocon is expected to do, that is going to be a drag on their return ratios, both return on equity and return on capital employed, which is, I think, stayed around that 12.5% kind of a mark and expected to do so. So again, I think the moment in terms of the stock price has been quite large over the last few weeks and quarters. The business fundamentals are no doubt good, but again, I think in terms of valuations at the current juncture, my own take is that there is not enough upside from the current level. The stock might move, but again, I think meaningful upsides from the current level, a little bit doubtful at this point of time.
Okay. Stocks in news. There is Siemens, which has got a reasonably large order. Gujarat Gas got authorization for the Ahmedabad district. But Tata Communication remains that big draw as well. And let's get in the view. This is, of course, Gujarat Gas. And we'll talk about that as well with Hemang and Mayuresh. But let's first get in Bhavesh Gandhi from IIFL. Just out of his morning meeting. Joins us on the phone line to talk about this deal and the impact that it could have on Tata Communication. So, Bhavesh, good morning. Thanks for joining in. Finally, they are able to sell this at about 3,000 odd crore rupees. How do you view this?
I think if you look at the absolute ZAR number at about 6.55 billion, and I assume this could be the enterprise value, and compare it with the previous deal size at about, for enterprise value, about 7 billion ZAR. So it is not much of a difference. And given the way that rupee has appreciated versus ZAR in the past 6 months, since the collapse of the last deal with Vodacom, I think the absolute number does look pretty much in line with what was on offer with the previous deal.
So, Bhavesh, what's the call now at Tata Communications, given the recent run-up in the stock ahead of the deal?
We have always been positive in the stock, and we would continue to remain so. Now that the deal overhang is behind us, and Neotel would no longer be part of the overall balance sheet, which would then obviously lighten.
So, Bhavesh, about $500 million from a total debt of what, 1.5, and they might not actually get the entire $500 million as well, because this seems to be the EV. So how much do you think the debt goes down by, based on the calculations that you would have done? And what's the now remaining asset value for the remaining business of Tata Communication?
See, Tata Communication main asset or the main business will obviously be the data pie, which brings in close to 80% of the EBITDA, or probably even more than that. So that would be the key asset, and we expect the rest of the ex-Neotel business to sort of continue the re-rating that is underway from about let's say 4 to 5 times EV EBITDA to about 7-8 times EV EBITDA, which would then place it still below some of its global listed players, like Level 1 Communication.
Okay, fair call. And I think, Bhavesh, thanks so much for joining. I think he said in as many words as well that he remained positive on Tata Communication, and with this deal, which is not significantly different from the earlier valuation of 7 billion rand, which is, I mean, hardly what, about 200 to 50 crore rupees. I think this is pretty much in line with his estimates as well. Debt goes down a bit, and that should augur well for Tata Communication as a stock. 450, but telecom is just under such a bit of a cloud. Though this is a different business from the run-on-the-mill telecom business that some of, I mean, the standard telecom business, let me correct my words, the standard telecom businesses some of the others have, more a data company. So let's see how this one shapes up. Should help in reducing the debt. The stock should, in all probability, react well today.
Yeah, as it has been, and yesterday as well. In fact, here's a word coming in from Nick Rudnick, CEO at Liquid Telecom. Talking about the Neotel buyout, he's saying that we're excited about this transaction, leveraging the strengths of RBH and Neotel, and Liquid Telecom will offer an unprecedented fiber network with a unique set of services and international connectivity. So that's the view coming in from the CEO at Liquid Telecom. And also Vinod Kumar, MD and CEO at Tata Communications, saying that Liquid Telecom is the right partner for the next phase of Neotel's evolution. So that's the word coming in from Vinod Kumar, the MD and CEO at Tata Communications. But chat stocks, given that the SGX Nifty has recovered quite a fair bit from the lows of the day, and it's going to be all about individual stocks, as it was within the small caps at least yesterday. CK, let's start off with your positional play for the day then.
Well, the PSU banks are, they are continuing to have a party even as the private sector banking are witnessing some selling. In fact, that's pretty curious because 3 weeks running they have been getting sold. Be that as it may, PSU banking is where the action is, and more stocks are joining that bandwagon. The fresh one, which I believe has risen to a point of breakout, is Syndicate Bank, and the pattern on that is very encouraging, and minimum right now it's trading at about 72 levels, and a move past this would enable it to go somewhere between the price region of 76 to 81. First halt may be at about 76. That could be of interest to 1 or 2 day traders, but for positional players or swing traders, the targets like 81 to 85 would be of higher interest, and I think that would get enabled if PSU banks continue to remain in play. And for that, the market will have to remain a bit steady. So given these two as a basic underlying condition, I think Syndicate Bank could make for a fine positional play.
Yeah, certain PSU banks are making their way up. Yesterday, Vijaya, maybe a Syndicate and a few others did do well. Mitesh, your ideas for the day? I think we've taken one. What about the rest?
I have a buy on Cipla with a stop at 484 for targets of 505. It's a conditional buy. The stock price needs to clear pivot levels of 491. And the other two buy calls are on Grasim when we saw swing breakout and a fresh high. That's a buy with a stop at 4330 for targets of 4470. And Gen Irrigation, the stock has been in news with a lot of brokerage upgrades. The technical pattern is also quite positive and it's given a breakout. So buy with a stop at 16.5 for targets of 78.
Right. Siddharth, what's on your list?
You guys are flashing about that idea analyst impact. I don't know what exactly it is, but on 3rd of June, stock fell by 10% because of some stake sell, and there was 46% rise in open interest. Yesterday, we saw some 5 to 6% squaring off of position, stock bouncing back, and I am taking a lot of art from this, and I'm expecting further short covering to take place in idea. So probably, the stock can bounce back to 106, 107 odd levels, fix a stop loss of 97 and go long over here.
Right, Siddharth. Thanks a lot for that. SGX is up 4 points, 85. That's 8,085 for SGX. Now, bear in mind, if I only look at what's happening in Britain, what's happening to financial stocks, which are largely of London domicile, the Barclays and the RBS of the world, well, there is reason to panic. Those stocks are falling as if there is no tomorrow, both in terms of market cap and also in terms of percentage. US bond yields, that's the rate at which you can borrow in US now. That has plunged to sub 1%. First time in its history. And pound, while its history here, pound is at a 31-year low against the dollar. So these levels pound had seen in 1980s before America really became a superpower. So the collateral damage of Brexit is that large. But the collateral damage of Brexit is not really creating a panic or a meltdown in any of the other Asian markets. That's some degree of comfort. But my sense is that you should not be in a hurry to ignore the global ripples. These things can start with a spark and then they can go higher. CK made a brilliant point that don't be in a hurry to chase stocks. The upside is limited. Markets will remain volatile, and if you want to buy, you should wait, because stock will come to your prices, because valuations are not terribly cheap in this kind of a market. So what should you buy at the current juncture, and what should you buy on every decline? Let's talk about some fundamental ideas, and Himang Jani joins us. Himang, before we get into specific ideas, what is your assessment of the overall scheme of things?
Well, I think that the market has been quite resilient, and we've outperformed in the past about 2 or 3 months. And this entire development of Brexit is something that the market was not factoring in. And we cannot undermine the possible volatility coming out because of the increase in the credit swaps, the currency movement, and the implications that it can have on the flows. So I think that at least in the short run, there is not a case for a significant upside in the market. The downside can be debated, and it would depend upon few other factors like monsoon, how the earnings season goes, etc. But I think in the short run, we should be a little careful. We should create a liquidity and look out for the companies which you can really buy at a possible correction.
Mayuresh, want to discuss the prospects of IT with you, because yesterday as well we were chatting with experts, and they believe these of course are industry spokespersons. They believe that this is actually the Brexit vote, that is going to make Indian IT more competitive, and outsourcing is going to get a big thumbs up as well post the Brexit vote. But what to your mind is the concern with the market, given the kind of selling that we've seen in the IT names?
No, Aisha, again, I think this point will be understood more deeply over the next few weeks and months. What really happens with the renegotiations, specifically with Great Britain and the European Union, and the large part of that would also depend on how the consumer discretionary spending at the client end will start happening on the IT budgeting part. Having said that, the cross-currency impact is something that one really needs to comprehend with going forward, because a lot of these IT majors do have exposure with the GBP, they have got exposure with the dollar in a significant manner, and that does affect their hedging policy to a great extent. So the cross-currency will act as a headwind, and what kind of an impact that has on their EBITDA margins, I think the next few quarters will tell. So I think both these factors in tandem are probably creating an uncertainty in terms of what kind of a top line miss we might possibly, specifically from the EU and the Great Britain business, for a whole host of IT companies. And secondly, I think what happens with the EBITDA margins in case there is hit both on the forex part as well as the cost escalations probably going up if the renegotiations do not work in the manner that they are expected. So again, I think in constant currency, I think a lot of the IT companies are expected to do well. But again, I think the Q1 numbers will lay a testimony to the fact in terms of what the management commentaries are in terms of the future outlook. And I think all eyes will be what the management commentary will be specifically from the EU region. So again, I think any decline onto these stocks over the next few weeks, I think a systematic way of investing into the top IT players is something that we are looking at. Our own take is that constant currency terms, the stock should do well. They've got tailwinds in terms of utilization levels expected to go up. And again, I think do not see a meaningful cut probably happening in the budgetary spending, specifically from the client side. But again, I think one must wait for declines onto these counters. Markets are extremely volatile. But again, I think if one really has to choose IT, it has to be the top tier IT names.
Hemang, tell me some of the stocks that you are recommending to your clients at this juncture. And, to begin with, is it really a prudent strategy to buy this current dip in the market and go and chase the stocks you want?
Well, if there is a further correction in the market, definitely I think it would provide a good opportunity for investors, because the sharp run up a lot of investors had left behind. So I think definitely we should be looking at that opportunity. And talking about the sectors or the pockets that we would be looking at, see, there are two sectors that I have in mind which are domestic focused and which would be the big beneficiary of the monsoon, because the progress of the monsoon has been good. And as we move ahead, there is going to be a sense that certain pockets would see the benefit of the volume growth and the margin expansion. So within that, we like some of the names in the FMCG, So something like Britannia or Marico or HUL, we think that a better monsoon will bode well for them in terms of volume growth. The margins have been stable, and we will see decent upgrades in those pockets. Apart from that, even something like M&M and Maruti would also show decent growth going ahead, because of the better monsoon. So these are the pockets that we would be really looking out for buying.
Which is one large cap IT stock, Hemant, you would like to buy in this decline? Every company is different. TCS has exposure to Europe, but in terms of a data delivery center, they hardly have a presence in London. Markets feel that every company, every IT company will suffer, and will suffer in a meaningful manner, but the reality is very different.
Yes, Nikunj, I agree with you that the reality is that every company has a different exposure, and it is also important to note that every company which has an exposure to the Eurozone or UK does not necessarily mean that would go through a pain of currency volatility, etc. It would depend upon their hedging policy. But as of now, on the face of it, what we believe is that if there is any further weakness in companies like Infosys, which anyway has a lower exposure and which has corrected quite a bit, could look at buying it, because a part of the correction was also because of the indication that this quarterly numbers may not be good. So once we have that factored into the price, we could really look at buying into it, because the overall guidance has been maintained.
Well, some of the other names which could very well be active in trade today, and one would definitely want to see whether or not there is any follow through coming in for Aditya Birla Nuvo, considering the stock saw a big move in trade yesterday. Mitesh, what's your own analysis on the chart pattern on AB Nuvo? I mean, in a falling market, this one shot up a good 7%.
I think a very good breakout for AB Nuvo. My sense is that if the stock can sustain above levels of 1100, which is where the stock had peaked out in January 16, I think then we are looking at some very aggressive targets of around 1350 over here. So I would quite be positive. I think maintain long positions as long as we don't see a daily close below 1100. I think I would maintain a positive bias.
Well, Hemang was just talking about his preference towards FMCG. Let's bring on board Mubina then and chat about one of the FMCG's names. Okay, we will get to Mubina in just seconds from now and, talk about the brokerage opinion on Dabur in particular. Hemang, you've talked about your preference towards Marico, but what about the others like Dabur, or for that matter, some of the bigger names like a Unilever? Do they also form part of your preferred list?
Absolutely. We think that, both Lever and Dabur, if you look at their performance in the last few quarters, the volume growth has been extremely good. I think to some extent Patanjali factor was, overplayed into some of these names. Even, something like Imami we cover, there was an apprehension that they would go through pain, but the volume growth that most of these companies have reported is exceptionally good. And the only thing is that, once you see the monsoon coming back, because the rural side, the volume growth was not looking that good. And we hope that some of these companies would do a good amount of catch up post monsoon. So in case of Lever, we think that there is a case for a 10-12% kind of an upside, because the margins have been quite stable. Even in case of Marico, we think that it can give a 12-15% kind of an upside from current levels. So we are quite positive on the FMCG as a pack.
Mayuresh, let's be real here. We can talk about Patanjali, and Patanjali is a disruptive innovation. It's forcing everyone to rethink their basic strategy. But the volume growth from a Dabur, a Marico, it's not been bad.
Absolutely not, Nikunj. And again, if you look at the entire landscape that these companies are operating out of, there is a huge amount of scope for volume growth to actually meaningfully pick up over the next few quarters. I think what you've probably seen over the last 2 years were deficient monsoons, and rural spending was not quite there. So again, I think expectations of good monsoon this time round will probably boost the volume growth for a lot of these FMCG companies, and each company has a speciality of their own. So one must realize that these companies work on a multimodal model. They've got retail distribution models, they've got rural reach, and that probably helps them in creating the right rural-urban mix in pushing through their products. Secondly, I think if you look at how the input cost deflation has helped a lot of these companies in the past few quarters. That benefit probably might not start coming through as you've seen some amount of inflation start picking up, specifically on the input cost side, and that probably will ensure that the EBITDA margins are curtailed, but that will get more or less offset with increase in volumes. So my own expectations is that a whole host of FMCG companies have actually traded at higher multiples in terms of their historical 5 or 10-year averages compared to where the Sensex or the Nifty trades. But again, I think if monsoons are better, if the discretionary spending comes.
Right, Mayuresh, actually, I'll tell you what, I'm going to come back to you in just seconds from now, 10 seconds, and we would have the first pre-open rates for the day. There they are, 80.47 now in the Nifty, so about a 0.5% downtick is what you're seeing. The Sensex, though, is more in line with what the SGX Nifty was indicating earlier today. A quieter start and exactly how we left it off in yesterday's trading session as well. Tata Communications definitely is the one stock that you need to look out for post the Neotel Communications deal. Let's see what that stock is up to. That stock should come up for you on your screens first. Tatacom is the one in focus. Remember, Liquid Telecom and RBH have announced an agreement to acquire the company's South African subsidiary. That's Neotel Communications. A gap up start there, 10% higher for Tatacom as we speak. You've also got HCL Technologies, and newspaper reports seem to be indicating that the company is now struggling to retain their existing customers or clients. They've lost contracts worth about almost $1.5 billion in just the last 2 years. So suffice to say, you may see some follow-through selling in IT. That is going to be a key parameter to really look out. You saw that transpire yesterday, and today too, at least it's flattish but with a negative bias for Infy and TCS as well. So these are a couple of stocks which are in focus. Bharti Infra, and the buyback opens on July 12th, closes on July 25th. This has been very, very actively traded off late. And yes, yesterday it was all about the broader markets, what with the move coming in for a Biocon and Aditya Birla Nuvo. So definitely want to see whether there's any follow-through coming in on these names or not. AB Nuvo, very impressive move there. A 7% uptick coming in the stock yesterday, and today too it starts off positive. Ditto is the case with Biocon. And yes, the OMC pack was very, very active yesterday. So the likes of NHP, BP, IOC, they all held out, and today too that positive momentum clearly sustains on these. Definitely want to check in on what the rupee first ticks as well are, and whether or not you're seeing any weakness trickle in. Up until the last 2 day trading sessions, it has to be said that kudos really to the currency, because that has really managed to withstand this global storm. And today too you're seeing gains come in for the rupee. 67.76 is where we are at. Strength of about almost 18 paise kicking in for the INR.
It's not a bad start, Aisha. Again, it's not a bad start. If you look at India in isolation, looks like there are no problems in the world, but you cannot undermine what's going on in the world right now. 81.06. My limited point here is that the global flows are going to be volatile. If markets went up in the month of April, May, and early part of June, they went up on two legs: local liquidity and a lot of global support. One leg could be broken. I'm not making a case for a serious reversal here, but the upside could get jammed, and that's something which could be a challenge, at least in the short term. Aditya Birla Nuvo, Aisha rightly pointed that one out. Big mover in the F&O market, and I think the rub-off effect of that buzz that Bajaj may buy out, or the Bajaj Group may buy out their stake in the insurance business from their global partner Allianz, could have done the trick for Aditya Birla Nuvo. M&A has started in the insurance sector. After that Max HDFC deal, just about everything in the life business and the non-life businesses getting re-rated. So what is Aditya Birla Nuvo's connection with insurance? Well, within Aditya Birla Nuvo, they have a subsidiary which is Aditya Birla Financial Services, which is a financial behemoth which has the mutual fund business, the insurance business, both life and non-life, which is embedded in that. Hemang, is it a good time to now again bet on some of these proxy insurance plays? Because 2016 and 2017, we will get a lot of news flow from the insurance sector. Listing, companies going public, stake buyouts, M&A.
Absolutely. I think this recent deal of HDFC Life with Max could actually trigger off some kind of a re-rating for the pack as a whole. We've seen that reflect in some of the companies like Bajaj Finserv and few other insurance companies also. In case of Aditya Birla Nuvo, apart from the fact that if they really sell off their insurance arm to Bajaj or anybody else, they would get a much better valuation. And apart from that, because of the holding company structure that Aditya Birla Nuvo is working with, they are not getting the right valuation for each of their businesses, particularly for the businesses which are doing extremely well. So we are also hearing that there is going to be a move to actually do away with this holding company structure, which could actually re-rate the company, because operationally most of their divisions are doing well. So I think some of these companies are extremely well placed.
Almost everything out there is doing very, very well. But by the way, keep in mind the stock of the morning seems to be Tata Communication. Early days, maybe still 4 minutes still left for the pre-open rates to get over. But Tata Communication is up 8% currently. Extremely good show. And Gujarat Gas is the other one, which is up 4%. However, the top 3 stocks to watch as per dealing rooms. Ajay is here with the list of those. Mubina Johnson with the top brokerage view. But Ajay, to you first.
Good morning, Neeraj. There's a very sharp recovery in the rest of Asia, including SGX Nifty. So the dealers are betting on lows, to buy on the dip if there is one in the morning. The first stock, of course, is L&T. Now, L&T has met some of the top mutual fund companies and have indicated and discussed, the road ahead, and they have indicated that the top line recovery looks much more visible from here on. In fact, mind you, on the dips, L&T is becoming the stock which is rebounding first, and it's not breaking that 1400 mark which actually it crossed after the results. So watch out for that one. Apart from that, dealers are also highlighting how BSE 100 top gainers list yesterday had at least 5 PSU banks. So PSU as a pocket is gaining momentum very smartly, fund buying as well as fresh long position. BOB is the stock to watch out for according to dealers, which looks strongest, and that is also one stock to watch out for. AB Nuvo you already discussed, because of the insurance embedded value of Birla Life Insurance. There's a lot of traction, not only fresh long positions, but fund based buying is also seen there.
To bring on board Mubina then and talk about the Nomura downgrade which is coming in for Dabur. Mubina, highlight for us, what is Nomura saying right now and what are the growing concerns?
Oh yes, you rightly mentioned the brokerage has downgraded Dabur from a buy to a neutral, but they've raised the target price from 306 to 325 rupees, just about 2 odd points. Now the prime concern is valuation. They believe that the valuations are quite demanding, and that in the run-up that we have seen in the stocks recently, all the positives seems to have been priced into that. But nevertheless, they do continue to believe in the long-term story of the company. Remember that the food business recovery has is quite strong. We saw that in the last quarter's results, where they were really been able to recover the kind of losses that they saw in the food business part of the business. And lastly, even the company is a key play on rural consumption, which of course most analysts are expecting will be a key growth driver, and of course the natural themes once again a key growth driver. So that's something that's keeping Nomura more or less positive on the stock. But apart from that, its valuations, like I mentioned before, the stock is trading at 37.6 times the FY17 financials, and on an average the stock usually trades at a discount of 5% to the sector, but now it's trading more or less in line. So they believe that there may be some correction. And lastly, they advise investors to actually consider switching to Imami or HUL.
Right, Mubina, thanks a lot for that. 37 times 1 year forward, not the exact value business at the current proposition. Mayuresh, we can write a lot of concerns about how valuations in the staple sector are expensive. But that is one sector where I think the growth is still decent. If I look at Dabur, if I look at Colgate, the kind of numbers which we're getting from a Gujarat consumer, these businesses may be expensive, but they continue to grow at a stable global rate run rate when there are a lot of global concerns.
Again, Nikunj, I think if one really needs to take one parameter into account, one really needs to look at the price earnings growth model of a lot of these companies. And again, I think the price earnings multiple is the way ahead for these companies. And again, I think the premium multiplications that these companies derive is more or less to do with the kind of growth story that these companies have meted out over the last few years. Will that growth story continue? In my opinion, yes, because I think the kind of prospects that we're probably expected to see and witness from rural India in terms of the product reach that a whole host of these companies have will give them the next legs of growth. So again, I think the return on capital employed and the price earnings multiple should probably start improving. And again, I think the improvement might not be that large, and the valuation's obviously expensive, as I was mentioning earlier. But I think that very premium valuation justification is here to stay. I think if the rural consumption demand is expected to grow at a very decent pace, which I expect it to, I think a whole host of these companies should report decent earnings growth going ahead.
Okay, 908, I just want to look at the big picture once again. Now there is recovery in Asia. So your top theme is there is recovery in Asia from the day's low. Hong Kong is up 1%. SGX is in the green, and the rates are indicating that we may start flat, which is not bad considering that the handover from US markets last night was very poor. There was a bloodbath. I mean, the European banks and especially the British bank, they were on a butcher block. They've been chopped 25 to 30% in last two trading sessions. So yes, the environment is very noisy, but up until now, that is not really affecting Asian markets. Hemang, I'm glad that the noise in Europe has not hit other indices and other Asian markets. But 2008 experience has taught us that the world is flat. You may ignore these correlations in the short term, but ultimately they haunt you.
Absolutely, Nikunj. We have been quite resilient for many weeks right now. Even post Brexit, if you look at the market performance, it's been quite resilient. But we have to remember that there is going to be significant volatility in the credit swaps. We saw the kind of movement that some of the European banks gave in the past couple of days, and the kind of currency movement that we have seen. So yes, as of now, we are not seeing any major implications on the FI flows, but going forward, it could very well be the case. And we are trading at last couple of years highest level. So in terms of valuations also, we are not looking that cheap. Yes, there are some positives to look at in terms of monsoon and maybe progress of GST, etc. But at least in the short term, I think it makes more sense to be watchful.
It's interesting to see that you've got a stock idea in Cox and Kings. Do you not foresee any volatility or weakness in the stock price, or concern rather, because of the forex volatility that we are seeing post-Brexit?
See, in fact, Aisha, this stock has underperformed quite significantly in the past 2 months, mainly because, in the operating performance, because of the Brussels terrorist attacks, that volume growth has affected dramatically. And we had an interaction with the management recently, and what we have come to know is that, though they have a huge exposure in the UK, 35% of their business is coming out of UK, but it will not have a significant impact in terms of the margins per se. And if the pound value goes down against most of the currencies, including INR, then you will see some improvement in the traffic which is emanating from India. So I think, this stock at this price point is looking quite attractive. In fact, we are looking at a 40-45% kind of an upside from current levels.
Just keep in mind, don't have time to ask these questions, but watch out one for Gujarat Gas, up about 6% in trade, and watch out for two stocks. One of them is Max Ventures, which post the listing a few days ago is consistently on an upper circuit, and I think in today's session too, we'll probably start off on an upper circuit. So good going for Max Ventures, up 5%, 57.35.
Okay, let me just recap the trading ideas as well coming in this morning from my experts, and start off with Mitesh's ideas. He's got a buy call coming in BPCL with a target price of 1,075. Cipla 2 is a buy call from him with a stop at 484, target of 505 intraday. Grasim 2 is a buy with a target of 4470, and he's also got a buy call coming in on Gen Irrigation with a stop at 69.50, target price of 78. Dr. C.K. Narayan buy on Century Textiles with a target of 652, and he's also got a sell on Tata Elxsi with a target of 1660 and a stop at 1711. Siddharth Bhamre then, and here are his strategies. He's got a buy on CEAT with a target of 843, stop 767, a buy on BHEL with a target of 127, stop at 150.
Okay, let's try and nail it down to that one top stock idea for the day. CK, what is it from your end?
Well, I would go with a breakout in Century Textile above 640, stop loss 634, targeting about 652 to 655.
Cement plays are having it good. Century Textiles, watch out for this one. Actually, cement, textile, real estate, whatever you call it. Mitesh, your top call?
I would choose a buy on Grasim with a stop at 43.30 for targets of 44.70.
Grasim it is from Mitesh's end. Another cement play. Siddharth, do you have a cement stock too?
No. I have CEAT, that stock I'm looking that, there can be a major bout of short covering which can pull it up. So buy CEAT.
All right, about a minute to go. And what is the theme? Well, the theme clearly is that Asian markets have recovered from the day's low. There is No panic whatsoever. Everyone is trying to simply adjust and understand the implications of Brexit. Even a market like China, which is very sensitive to global growth, is also about 0.5% right now. That's theory number. That's the other part. Then you've got Tata Communication, which has announced a large deal. Needless to say, it will be a gap up start for Tata Communication today. Then you've got a big bullish call coming from Ultra Tech from CLSA, and Nomura has downgraded their price target on Dabur, citing that it's a great company, but valuations are slightly stretched. They are trying to make a point that silver is now available actually at a price of gold. So avoid Dabur according to CLSA. The first rates on your screen, it's a flat start. It's a start with the mild positive bias. It's a mild positive bias for Indian markets. In fact, Nifty is above 8100. If I map what markets have done in last 1 week, despite Brexit, markets actually have been very, very flat. 9 points up for the Nifty, and for the Sensex, the first rates will just come up on your screen. It's a flat start for the Sensex as well. Benchmark indices are off to a flat start, which according to me is really a victory for the bulls. Now let's address the big ones. First, the Bank Nifty, then we'll talk about IT, at least the large cap names, TCS, HCL Tech, Wipro, the big ones. That's the IT index for you. Another 0.5% off for the IT index. So the IT index for the moment is not going anywhere. Infosys down another 9 rupees, TCS down 9 rupees, and then Tech Mahindra is flat and it's at 503 right now. So there is no compelling case that why IT should go down further, but market sentiment I think is prevailing. Tata Communication is the big news maker, and my sense is that one will be off to a big gap up start, and it is off to a big gap up start of about 25 rupees. Sri Lanka Sugar is the top traded counter, up 2%. Then you got State Bank of India, which is nudging up very, very smartly. Punj Lloyd is up 8%. Himadri Chemicals, I don't know what's going on there, but volumes are incredibly strong for that one. And Arcom also, Aisha, looking very, very charged up.
Oh yeah, indeed. In fact, clearly the story of the day is Tata Communications post Liquid Telecom and RBH announcing their agreement to acquire the company's South African subsidiary, that's Neotel, for a sum total of 2,900 odd crore rupees. The 6% up move coming in for Tata Communications as we speak. A couple of other stocks which could be in focus, and a couple of newspaper reports seem to be indicating that HCL Tech is struggling to retain its existing clients. I definitely want to check in on whether or not there is any follow-through pressure on IT as a back per se, not just HCL Technologies, post growing concerns about their exposure to the EU region post the Brexit vote out. TCS as well has had a soft start. Tech Mahindra though has stabilized, it's flattish, and Wipro too is down about almost 1% or so. The newspaper article quotes HCL Technologies saying that, that they've been struggling to retain their existing clients and they've lost contracts worth about $1.5 billion over the last 2 years. So look out for that. Bharti Infra, wherein the buyback kickstarts July 12th, look out for that as well. And Gujarat Gas and PNGRB has granted authorization to lay, operate, build and expand gas distribution in Ahmedabad now. So Gujarat Gas has had a gap up move, 8% higher for this one as we speak. Besides that, you also should look out for what some of the other names like within the OMC basket are up to. So HP, BP were very active yesterday. Let's see whether there's any follow through coming in there. Yes, 1% higher for HP as we speak, and BP as well should have had a positive start for itself. Biocon, AB Nuvo, the star performers from yesterday, definitely want to check in on these as well. Biocon continues to ride high. 762 is the tick that you're seeing on this one right now as we speak. So look out for some of these names. Neeraj, what else is moving?
So, a slow move upwards for MCX, but with all the listing plans coming in for exchanges, typically the ancillary space tends to get excited. Let's see if this one tends to do that over the course of the next few days. MCX up about 1%. We'll talk in detail with Hemang Jani about that. Bajaj Finserv at 2230, 2235 is now trading at fresh highs for itself, or almost there. So good going there for that one. It's had spectacular last 2 or 3 sessions. Actually, all these, insurance holding companies, so to say, are actually moving up. Exide too in the last few days, not necessarily only because of Exide Life, but has been doing well. Aditya Birla Nuvo. So all of these stocks are having a good move. Want to check up quickly on Nitco Tiles. I think ever since that ARC contract to JM Financial and maybe change of promoters. Nitco, I think, has rallied some 55-60% in the last 5 or 6 trading sessions alone. So confess ignorance about the business of the company, but just the fact that it was a company in the right space, but promoters didn't do too much about it over the last few years. Maybe this change could be something that people are watching out for. And then, as I was saying, Max Financial Services and Max Ventures, both of them. Max Ventures, of course, going off. Max Financial Services yesterday hit new highs. Today, recent highs today flat. But Max Ventures continues to move up. Another 5% up in trade, 57.5 and counting. So really good going for this one. Hemang, both these. One, I think Max, what would your advice be? Because we've gotten so many queries on this one. I'm sure there are a few viewers watching right now as well. Would you advise at 57, 58 to get out of that stock? And secondly, just an update on MCX. You wanted to talk about that.
Yeah, I think this is basically a commodity business. They are into specialized film packaging, wherein earlier the management was looking at hiving off that business, but now they've said that they are in fact going to expand the capacity. They are going to put more money in terms of capex. But I think, there is no great visibility or growth as such for this business. And we believe that at 50 or thereabouts, it's fairly valued. We've seen some action for the past 2 or 3 days because of the open offer, etc., which again is at about 31.5. So I think if you compare to any other company which is into a similar business, the valuation of Max Ventures is far higher. So it would make more sense to get out of it. Now, coming to the MCX part, we are hearing that NSE has lined up a listing which could happen somewhere in Jan, and the valuation that they could possibly get would be about 17 to 18,000 crore. The interesting point to note for MCX is that the overall average volume in the commodity space has gone up in the last 1 year from about 12,000 odd crore to almost about 24,000 crore, which is not reflected in the actual price of MCX. Apart from that, there are few options launches which have been lined up, particularly for gold, silver and few other commodities, which could add to the volume and the revenue going ahead. And the entire company is available at a market cap of about 4,900 crore thereabout. So I think if there is going to be enough in terms of discussion on NSE listing, the immediate stock that could have some rub-off effect would be MCX.
A limited challenge with MCX is that what about the monopoly which we talk about? If NSE and BSE indeed move into commodity trading, then that's a problem. MCX right now is being protected because of because there is no competition. And if bigger exchanges, if more powerful exchanges, which have a wider reach, wider distribution, and now that SEBI, pretty much FMC and SEBI are going to be have been merged into one entity, what happens if the moat of MCX is broken? But Max is where the action is. Mayuresh, the conventional thinking with some smart guys is that buy Max Financials, it's a reverse merger. And if you buy Max Financial, you actually will be able to own a piece of HDFC Limited. That's conventional thinking. But do you think this arbitrage is worth the risk?
Now again, I think if you look at the entire reverse merger and the kind of expectations on the business itself, I think the business prospects look seemingly good, for both entities. Having said that, I think it is the numbers which will act testimony to how the business parameters will perform going ahead. But again, I think one really needs to understand that once both these entities probably get together, I think the kind of bank insurance model that they have been operating out of, I think they get a leverage out of that as well. And again, I think the kind of reach that both these entities can as a combined entity get to, along with the cost benefits that accrue to them, will appear on their financials in a much better fashion. So yes, I think investors holding on, I think should continue holding on to the stock.
Okay, Mayuresh as well as Hemang, good chatting with you both as always. Let's also check in on some of the other names. While Tata clearly is the star performer today, look out for Aditya Birla Nuvo as well. That's holding out for a second day on the trot now. 3.5